Hello AlgoTrades investors, it's Christopher Mullen from AlgoTrades.net. Just want to give you a weekly video update of where the markets are at, the type of price action we're seeing, what that has signified or provided in the past in terms of performance and stock market price action, and just kind of recap kind of where we're at overall. Now overall, if we take a look at the stock market, this is the SP 500 index. This is the 30-minute chart, but it is zoomed back several months. So the price action is very squished in here. Now what we've seen since mid last year, we've seen a market that has been going a little bit into a distribution phase where we see very sharp rallies with very minor pullbacks. Keep in mind these are intraday pullbacks, so these pullbacks are very minor, not giving really a clear opportunity to get long in the market. And of course it rolled over and went into this V-shaped recovery last October with a massive sell-off and a massive rally. Again, very strong V-shaped recovery without any significant pullback to really get into the play. Again, these are intraday minor pullbacks and they're not really significant swing trade entry points. Very difficult to get in without just having to jump in and hope that the market, even though it's overbought, continues to run higher. That's a very high risk play. So this type of price action, we get these V-shaped price actions where you get strong sell-off and a very strong rally, again, do not give us an opportunity to get involved, which is fine. It just means we sit in cash a lot longer and we kind of let the market do its thing. Now, since December, we've seen it go into a much more significant sideways rotation, meaning it continues to rotate from an uptrend to a downtrend in a very sharp pattern, meaning we're seeing it drop straight down and have a very strong rally. And again, just minor intraday blips, but nothing real significant to be able to play. So the market, the system has been trading neutral here, not really getting involved. We're starting to see the markets head higher here. Looks as though we could be starting a new uptrend. This is a fairly significant consolidation. We had a fairly significant shakeout and pullback in the market, kind of cleansing the air, cleansing the market. And it looks as though the market could be setting up for a significant move. Now this type of price action here is usually some type of consolidation, and at this point we could easily see the market, the next leg here is going to be fairly big. It'll either be to the upside or to the downside. At this point I have to believe it's going to be to the upside. The trend is currently up and we are seeing money flow back into risk on equities. So let's just take a quick look at and compare some recent price action that we've seen and how the system's performed going forward. Now if we squish this down, we can go and take a look at another time here. This is 2010. You can see the price action that we saw in 2010, very similar to what we're seeing right now. And you can see the cycles, the pattern, everything here is showing that we've got a very similar type of situation unfolding. And what happened after 2010, if we were to just pull this, take a look at this chart right here and just auto scale it. If we walk forward through here, you can see we had the next major leg up in the stock market before it started to correct again and become choppy into another consolidation phase. And of course 2010 ended up being a very solid year for performance. We caught a lot of it on the next major rally up. These moves here were more significant in order for us for the system to get active. And of course 2011 ended up being a good year also, of course, with the rally continuing. Now if we take a quick look, let's just go back here and take a look at another chart. Here is a very similar price action to what we're seeing now. Again, this one here on the top is 2011. We saw this happen near the end of 2011, and the price action very similar to what we're seeing, very similar in time frame and the amount of months that the market has been doing these rotations, these cycles, becoming very chattery as it consolidates and really tries to shake the market up and fake them out. And of course after that we ended up seeing the next major rally in the stock market. And of course if we go back and look at the performance that the system had during that time, again 2010 had a great year, getting an average of 64% return. 2011 That move happened kind of right in the middle of 2011. After that major consolidation in 2011, we had that big leg up, which brought us into 2012, which was a 78% year. And so when we get these major pauses in the market, these real chattery times of heavy rotation from one trend to another, they're very tough to trade. The system will underperform. But once the market picks up into a trend, whether it's up or down, we can see the system perform really well. Looking around this, we had 64, 78. The previous bear market in 2008, the system performed exceptionally well because it was a very strong bear market that lasted for a long time, and of course price falls faster than it rises. So that's where we're at. 2013, a little slower of a year. 2014, very similar to 2009. When you have a major trend reversal or major chatter in the market like 2009, very similar to what we had in 2014. And it looks as though we're setting up for a major leg in the stock market, and it looks as though we'll have some significant moves going forward in 2015 and 2016. Anyways, that's it for this morning, and hopefully the video kind of clears up where we're at in the market, the type of price action we're seeing, and where we're going from here. Take care. Bye-bye.